Good morning, and thank you for joining our virtual Bonding and Insurance for Government workshop. My name is Donna Ann Knapp. I'm the Small Business Development Manager in the Office of Economic and Small Business Development, which is also referred to as OESBD. I'll be your moderator this morning. I'd like to remind everyone that today's live workshop is being recorded. We typically post our recordings to OESBD's YouTube channel. If you have a few minutes today, I encourage you to take a look around our YouTube channel. We have some really good information there from past webinars and events. And at the end of each of our 5 presentation segments this morning, we'll pause to answer questions. So please type your questions in the Q&A field towards the bottom of your screen. And in case you're wondering, we'll be using the chat for networking purposes. So tell us and everyone else who you are and the type of business that you have. Go wild. The chat is for networking. Please put your questions in the Q&A field. Next slide, please. OESBD is a Broward County agency that serves under the county administrator and, of course, the Broward County Board of County Commissioners. Those are our 9 elected officials right there. Our county commission has established specific goals for Broward County, one of which includes economic opportunity. OESBD's purpose is aligned with that goal. Next slide, please. OESBD is comprised of 4 primary sections. There's economic development and international trade, community relations and outreach. You're not going to see them today, but they're in the background. They're actually the branding and marketing arm for the office. So they're working magic behind the scenes today. There's small business development, and then we have Film Lauderdale. All sections with distinct but complementary functions and all focused on promoting small business growth and job creation within Broward County. We do this through technical assistance workshops and trainings and by working with community partners. Today's workshop is one such example of the latter scenario. OESBD itself does not offer bonding or insurance, but we know that our small businesses need it in order to participate on contracts. And we know experts involved in various aspects of bonding and insurance for government contracts. So here we are. Over the next couple of hours, you are going to hear from multiple industry experts. And by the time they're done, you'll know why bonding insurance is required on Broward County contracts, how to position your company to better qualify for and get good rates when you apply for bonds and for insurance, how to go about obtaining it, and some of the bonding and insurance products that are commonly offered on the market. Next slide, please. I'd like to introduce you now to our first presenter, Amy Lanham, who is the Director of Broward County's Risk Management Division. Amy, take it away.
Sorry, start over. I was still muted. My name is Amy Lanham. I'm the Director of Risk Management here. I've been with the county for about 2 years. In this role, though, just for a few months. But I've been in a similar role. I moved here from Maryland. I've been in a similar role for about 15 years. So I have a little bit of time on me. And I'm going to kind of go over today, if you can go to the next slide, kind of our role, risk management's role in this process. A section of our department is one section that would work closely with anyone interested in doing business with the county. I'm kind of going to talk about that a little bit, but our office as a whole, to give you an idea of what we do, is a little more comprehensive. So risk management for the county kind of focuses on the overall identification, assessment, and mitigation of risk for all things county related. Everyone doing business with the county, everyone working in the county doing business for the citizens of the county. So the 3 things that we focus on are safety and occupational health. We have a self-insurance and claims management section or sections, and then commercial insurance and contract management, which is the section that we'll kind of focus on today, because that's what the interaction would be for vendors and businesses who wish to do business with the county. Next slide, please. So our commercial insurance and contract section generally has around 5 individuals who kind of complete the tasks that are listed on the screen here. We set minimum insurance requirements based on the type of function or type of business you want to do with the county, based on what that exposure might be for the county, our experience with that. We will then review certificates of insurance to make sure that, the minimum qualifications, minimum requirements are met. And we will kind of communicate back and forth with vendors to make sure that we're clear on what is and is not compliant and what needs to be done to help work you through that process. So we review and respond to exceptions, we review and respond to questions, we talk to the project managers and the vendors, and then we'll often attend purchasing meetings before, during, and after to kind of help guide that process. Next slide. So this is kind of an overview of our participation prior to the solicitation. Like I said, we are kind of setting the expectations. We have participation in the pre-strategy meetings. We have kind of some set guidelines that we will then modify based on, the needs of the county and what we're hearing back from the departments and the vendors and project managers. During the solicitation, we have the back and forth with the vendors to make sure that what we're receiving does meet the minimum requirements. And if not, we're working kind of through those issues with you if we can. And then once the vendor submissions are received, we're sent an email and we kind of go through and sign off on everything, add it to file, and work through that process. The next slide. So we do review each vendor submittal. We do this for the entire county, so that section is quite busy, but we have a lot of expertise in that area. So we have people working together. We always have people who work with you. As I said, we will email back and forth. This is kind of our process. We do have a system, actually a new system that we utilize for this, which hopefully will make it a little easier for everyone, us and the vendors. And then once everything is complete, we do complete a compliance memo to make sure that there's something in the file that shows, the interaction back and forth and the final completion and compliance. The next slide. This is kind of the certificate of liability insurance sample. It gives you an idea of what we're looking for. This information is also part of the solicitation itself. So this shouldn't be any surprise, but it kind of provides a snapshot of the things listed here, the coverages that we need to see, the policy numbers and the term, all the things that we pay attention to, the carriers, making sure that we are listed as a certificate holder, the producer, and then any special conditions, if any, apply, because obviously every situation could be unique. We have to verify all this information. Generally, we're able to do this with the document. Sometimes we do have to make a phone call or inquire with someone. But this is a sample that we do provide, and then the final copy would go into a file to make sure that we have it and we keep it updated at the end of each renewal. Next slide. A fully compliant certificate is going to reflect some of the things that I just said. The correct certificate holder is always important, the name and address for the county that's relevant, any additional insured, any waiver of subrogation language, correct coverages and limits, correct insured information. And then, of course, if there's ratings involved, the correct insurer ratings, which there is usually a minimum within the contract, and then the current coverages. So I think for our part, even though it's crucial information, it's a pretty small piece of the pie and it's pretty straightforward. And I think that's pretty much it for our section. Any questions?
Thank you, Amy.
It's quick.
It was. Let's see. I don't see anything in the Q&A, but while everybody is figuring out where the button is, which is towards the bottom of the screen, if you don't mind while listening, because OESBD does interact with all other Broward County agencies that are part of the review process for solicitations, I was wondering, do vendors get a warning when their coverage is getting to a point where it needs to be renewed? Like they need to submit a new certificate, or is it like college where buyer beware, be on top of your game?
So it is up to the vendor. It's the vendor's responsibility. We are putting a system in place. As I mentioned, we just procured a new system. It's not fully active yet, but as the system goes in place, we're hoping to put in reminders automatically. There's not a manual process right now. It would be between the vendor and the project manager. So the vendor's expected to keep up on their certificate.
Got it. And one other question, and not to put you on the spot, and if you're not prepared to answer it, don't answer it.
No
But my
worries.
team and I have always been curious. There are instances where the limits for a contract that are advertised with the solicitation obviously have to be met by the prime vendor that's awarded the contract. What about the subs under the prime that don't necessarily have the same volume of work under the contract? Are there exceptions where the subs don't have to carry those same limits, or how is that handled and determined?
So it's a great question. It doesn't put me on the spot. Unfortunately, though, it is unique to every situation, right? So it depends on the type of work being done. It depends on what the options are. There may be options to add additional insured to the upper policy that includes the sub. We'll work with people to do that. Um, Unfortunately, I think what a lot of folks misinterpret is the size being relevant to the risk. So we understand sometimes that there are small vendors, even small contract amounts. And for the size of the contract, the limits seem high. But it's more related to the exposure and what could happen. So even though we may have a small contract and a small amount of work to a subcontractor or a small vendor, if the liability to the county is still potentially high, we still need those higher limits. So it depends. And we just, that's why we have that back and forth communication. And that's why we're here as a resource. And if someone has that question, we'll talk about what they're doing and why they think the risk might be more minimal. And if we can come to an agreement, there are exceptions that can be made, but it would be on a case by case basis.
Got it. Thank you.
Sure.
All right. I don't see any questions being posted. Nobody has any questions so far. So we're going to go on to our next segment. Thank you, Amy. Our next presenters are Marlyn Mahabeer and Jermaine Pinnock, both senior purchasing agents in Broward County's purchasing division. And with that, before I turn it over to them, I just want to double check. I know we were having some technical issues. So if Marlyn and Jermaine would just say hello really quickly before I cue it up for them.
Hello, everyone.
Good morning, Jermaine.
Good morning, everyone.
Good morning, Marlyn. Okay, I'll turn it over to you now. Thank you, guys.
Good morning again, everyone. My name is Marlyn Mahabeer, and as Donna introduced me, I am a purchasing agent senior with the purchasing division of Broward County. So today we're going to be looking at bonding for Broward County contracts. And we will go into the different types. Next slide, please. Next slide, thank you. So today we'll be discussing bonding. What is bonding? What are we requiring of you? The types of bonds, surety companies, and we will also be discussing briefly our new e-procurement system, BPRO, which is Bonfire. For a vendor view, it's considered Bonfire. If you hear BPRO, it's from Broward County side. Next slide, please. So when are bonds required? Well, according to our Broward County Procurement Code, Section 21.23J and K, the Director of Purchasing may require vendors responding to any competitive solicitation to post bid security to ensure that they will honor the terms of their response. Any required performance and payment bonding is in addition to and not in lieu of the bid security for competitive solicitations. For our construction contracts or construction contracts, having a little bit of tongue-tiedness this morning, pardon me. In accordance with the Florida Statute 255.05 and 337.18 for construction or repair of a public building over $200,000, bonding is required for those contracts. And for maintenance contracts over $250,000, bonding is required for those contracts. For request for proposal with pricing, that also requires bonding, and RLI two-step. And RLI is request for letters of interest. So two-step solicitations, those also require bonding. Next slide, please. Okay, so now we're going to go into a bit of definition. So bid bonds. Basically, a bid bond is a guarantee from a surety company that provides financial assurance to the county that the contractor is able to fulfill obligations. As we mentioned earlier, construction, RLI, two-step process. So what amount is required for a bid bond? A bid bond, we require 5% of your bid amount. And the bid bond is due at the time of solicitation opening. So if you're participating in a solicitation that requires a bid bond, you are required to submit the bid bond either through Surety 2000, which is online, and there's an access to it in the solicitation documents. And you also have the option to submit the original bid bond through mail or in person, courier service, or in person to the purchasing division prior to the solicitation end at 2 p.m., whatever date that may be. When we say the original bid bond, we must be able to see the raised seal. It must not be a photocopy, but we do encourage that if you are submitting it through the mail or courier, or you're dropping it off in person, that you also send or attach with your solicitation a copy of that bid bond. Just in case there is any delay in the mail, at least we know that, yes, you have acquired a bid bond. And of course, there are additional permissions that's needed to accept if it's not received in time. If you do not have a bid bond, there are other ways that, or other types of instruments that can be submitted in lieu of a bid bond, such as money order, a certified check, cashier's check, or an irrevocable letter of credit, treasurer's check, or bank draft of any national or state bank within the U.S. So the bank must be within the United States. For the construction projects and two-step bonds, next slide, please. And request for proposals. Request for proposals, RFP, for those who are familiar with the terminology, RFP for request for proposals, request for letters of interest is RLI. That is a minimum of $10,000 that is required. So where a bid bond is 5% of the bid amount, this is typically a set amount, meaning $10,000 minimum, or it may be higher depending on the risk of the whole project. In the two-step process, which is the RLI two-step process, what happens in that, you submit a proposal bond, and that's for the first step of the solicitation. Once the shortlisting is completed, then what will happen? Then we move to step 2, and in step 2, we will return the proposal bond because now it's going to require a bid bond. And again, a bid bond is 5% of your bid amount. So with the two-step, it's a little different. You send in a proposal bond first. Then when we get to step 2 of the process, we return, meaning the county will return the proposal bond because now you have to submit a bid bond, which will be due at close of the hard bid. And let me know if anyone has any questions on that. Next slide, please.
All right, thank you, Marlyn. And again, hello everyone, happy Friday. So the other two types of bonds that are required to be submitted to the county upon notice of contract award are the performance and payment bonds. Next slide, please. So within 10 calendar days of being notified of contract award, the vendor is required or will be required to furnish the performance and payment bonds. The bond shall be in an amount equal to 100% of the contract total amount, guaranteeing to the county the completion and performance of the work covered in the contract. As well, it will also ensure full payment to all suppliers, laborers, subcontractors who are employed pursuant to the project. The submittal of the performance and payment bond is a matter of responsibility. So as Marlyn mentioned before, the bid bond, the submittal is a matter of responsiveness. The submittal of the performance and payment bond in this case is a matter of responsibility. So Broward County has a standard bid bonds, performance bonds, and payment bonds that are located on the Purchasing Division website. Please be aware that each bond shall be in effect for 1 year after the final completion and acceptance of the work. Pursuant to the requirements of Section 255.05 of the Florida Statute, all performance and payment bonds received by the county shall be recorded in the official records of Broward County at the expense of the contractor. Once you have finalized your performance and payment bond and you have recorded them, the originals must be provided to the Purchasing Division prior to the issuance of a purchase order. So arrangements can be made with the Purchasing Division to drop off the original documents after recording, whether in person or any courier service of your choice. In lieu of the submittal of performance and payment bond, the county will also accept money orders, certified checks, cashier's checks, an original bid security or irrevocable letter of credit, treasurer's check, or bank draft of any national or state bank within the United States. Next slide, please. Okay, so in essence, these are the three stakeholders that are involved in the bonding process. The surety bond for a project, they are provided by the prime contractor and its surety. The bid bond will name the prime contractor as principal and the prime contractor's surety as surety. And in our case, the owner of the project, they will be listed as the obligee. Next slide. It is important to note that your surety must be authorized to transact business in the state of Florida and shall comply with the provisions of Section 255.05 of the Florida Statute. If the bid bonds that are submitted are issued by co-sureties, each surety listed on the bond shall meet the requirements of the Florida Statute. In addition, each surety shall submit a power of attorney and the lead surety shall be identified for purpose of underwriting and claims management. If during the solicitation advertising period, you have any questions regarding the bidding or bonding requirements, they must be submitted through the question and answer section in the county's e-procurement system before the Q&A period ends. If bonding requirements are required for a project, a copy of the county's bid bond, bid security, performance and payment security, and the qualifications of surety requirements will be included in the advertised solicitation. Why do you need to become bondable, you may ask? So becoming bondable could set you apart from your competition. And it will also open the doors for more opportunities, as more and more jobs are requiring that you provide a bond. If you are not bondable, then you may miss out on the chance of getting a great opportunity. Next slide. Okay, so it has been a very exciting period for us in the purchasing division because as of September 9th, 2024, all new solicitations have been and will be advertised through our new e-procurement system, BPRO, as Marlyn mentioned before, and this is powered by Bonfire. Therefore, you will no longer receive notifications from Periscope S2G, so regarding solicitations from Broward County. So all new notifications regarding solicitations from Broward County will be received from BPRO. Next slide. So we are currently hosting vendor training sessions to give you an opportunity to learn how we have transitioned from Periscope S2G into Bonfire. During these training sessions, you will learn how to use the system to search for bids. Also, you will also learn how to submit bids and other key tips on how to navigate the system. Please note, if you have already registered with Bonfire, you will also be required to register with BPRO to ensure that you receive notifications about the solicitations coming out of Broward County. Next slide. The training sessions are completely free to attend. You are able to select the best session for your schedule. Join us for our next vendor training session, which is scheduled for Wednesday, September 18, 2024. So we ask you to please tell a friend. These are vendors that you have partnered with either on previous projects or you intend to partner with for upcoming projects. So BPRO is the hot topic coming out of the purchasing division. So please help us to spread the word. So the links for the training sessions and also the link to register for BPRO will be posted in the chat shortly. And if you are unable to attend the session 2 of the training sessions, you can also register with any of our or for any of our October dates. So before I go, I would like to share a gem with you. So with this system, once you're registered and you go into the system to view the solicitation opportunities, the system will allow you to see other vendors who are interested in the project. They are listed as document takers. This is a great opportunity for you as a CBE, SBE, or DBE firm to reach out to these prime vendors or contractors to say, hey, my name is company, say for instance, Best in Class, right? I see where you are interested in bid so-and-so. I believe I could add value to your team as a certified CBE, SBE, or DBE firm with Broward County. So again, this is a great opportunity for you to take advantage of the system, reach out and expand your business. Thank you.
Thank you very much. I smiled at the Best in Class company name. I like it a lot.
Thank you.
For everybody who's watching, to participate on Broward County contracts, the process is entirely free to register to become a vendor with us through BPRO. So I encourage you, if you want to get into the game, you don't even have to be certified in order to participate. You do need, however, to be registered. So if you haven't already, please, the information is being shared right now before I even launch into the questions. That QR code will allow you to go to the BPRO webpage and you'll be able to register. And that's how essentially you'll be able to do business with Broward County. That's the first step. You have to be a registered vendor. Think of it this way. If we don't know who you are, we can't give you a contract. And if we don't give you a contract, or we do give you one, who do we send the check to when it's time to get paid? So go ahead and register. I checked the Q&A and I didn't see any questions there, but Marlyn and Jermaine, while you were speaking, I thought of a question, and Amy, this might actually loop you into. I know a while ago, I don't know how common it is, but Broward County sometimes engages in OSIP, owner-controlled insurance programs. Do we still do that? And if we do offer OSIP, does it cover the small businesses that participate under that contract?
So we do have active OSIP projects, and we do have specific coverage for those projects. And they, of course, there is an application process separate and aside from all of this, where any subcontractor or vendor who wants to participate in OSIP project would go to the project manager for that project, or that contact point is, and they would go through that application process. And there are separate minimum requirements and safety ratings and insurance ratings and things that would apply. So similar, but separate and aside. And yes, we do have current open projects, and we do expect to have future projects.
Awesome. How would a vendor know if the OSIP program was applicable to a contract? Is it announced in the solicitation package, or as a small business, how would I know?
That's a great question. I don't have the answer to that. I'd have to get back to you. I don't know where all their I know that the information is advertised, but I don't know all of the sources.
Got it.
I'd have to find that out.
If you do find out, we will share it with everyone else, but thank you. And
Absolutely.
then Marlyn and Jermaine, I did jot down a few questions because everybody's giving such really good information. But before my question, I see something in the Q&A. It's from a vendor. In the past, they have for 3 years been certified. Unfortunately, they didn't receive anything from us. They applied twice and got about $2,500, but twice they were denied. And I'm thinking it has to do more with the procurement process, which actually leads into one of the questions that I had jotted down for Marlyn and Jermaine. I know for the current Periscope S2G, well, it's not current anymore as of September 9th, which Jermaine said, but in the former Periscope S2G procurement platform, purchasing and OESBD worked on several videos doing business with, and purchasing walked vendors through various steps with registering as well as looking up past solicitations, kind of doing their homework, if you will, to see what prior requirements were. Is there going to be a similar feature in Bonfire during that initial transition phase, or will it be a clean start? Will they be able to see previous similar contracts with the end of Periscope, or are we starting with a clean slate with BPro?
All right, let me take the first shot at it. So the system does provide different training sessions to the vendors, right? They are able to log in and access those training sessions through Bonfire, linked to BPro. However, what we have decided to do within the purchasing divisions, so for each solicitation that is advertised, we'll be hosting pre-bid conferences to really help the vendors to navigate through the system and make them comfortable to submit their offers.
So those classes that you had posted in your slide would definitely be a way for small businesses to find out how to not just be a registered vendor, but how to navigate the system.
Yes, and they can take advantage of the upcoming training sessions as well, where we'll get the specialists from Bonfire to come in and walk the vendors through the different stages of searching for bids and also submitting their bids.
Okay. Got it. And I think
And Donna, I'm sorry.
Yes.
Just want to interject. So you mentioned the Periscope being able to see the current solicitations or the past solicitations. As long as the vendor is registered with Periscope, they'll be able to see any solicitation that was submitted through Periscope. So they will still have access to that.
Good to know. Thank you. I was just curious about the history because I think purchasing did a really good series with us. And sometimes when small businesses want to have an idea, like they're just going out, they haven't done it yet, they want to have an idea of what was that bonding requirement and how did other vendors respond. The response won't be in Periscope S2G, but the requirements at that time would be for past procurements until we have a sufficient number of new procurements in BPro, I would imagine. So, Marlyn, I have another question. Yes, go ahead. I'm sorry.
No, I was going to say that, of course, as we are more settled in the system, I'm pretty sure that everyone will consider such a session that we had for Periscope. But that, of course, will be in forthcoming, not something that will be going right now. We're just doing the Bonfire assisted training for the vendors just to introduce them to the system. And as Jermaine mentioned, doing our pre-bid sessions just to walk through, hey, this is what it looks like now. This is what we're expecting when you submit your offer and the best way to look at the documents and so forth. So we have ample training opportunities, but as far as one that was like similar to the one that was done for Periscope, that is not scheduled as yet. And so any further information on that will be forthcoming.
Understood, and thank you. Let's see. I wrote down another question that I thought about. In the case of a joint venture, and this relates to procurement, sometimes it's not a 50-50 ownership structure. So there'll be a majority vendor in the venture. And oftentimes that vendor will submit a response to a solicitation. When it comes to the bond that's actually submitted, the bid bond, would that need to be, or does it make a difference if it's in the name of the majority owner under the joint venture, or does it have to reflect the name of the joint venture?
Good question. That would definitely have to be within the name of the joint venture, since it would be presented as, or the solicitation will be responded to by the joint venture company. So any requirements to meet the solicitation requirements would be coming from the joint venture company, not any of the individual companies.
Thank you. All right, I saw the Q&A move. I have it on my other screen. Let me go back. All right, it's the same vendor. I saw they have the same RFP priced between $2,500 and $5,000. It looks like it will cost a bidder CBE to bid on it. I'm not sure I'm fully understanding the question, only because that price threshold, unless we're talking millions and it's abbreviated, but I'm seeing 2,500 and 5,000, that would actually be below the threshold for a formal solicitation. So if the requester would just add a bit more information, we'd be happy to address it. Let me see if there's anything else. No, that was it. Any questions in the chat, team? I think I saw one asking about slides for this presentation, and it was noted that it will again be posted to our YouTube channel. The recording will be there. And we usually have it as a PDF, so you should be able to see the slides themselves as well. I have one final question for Marlyn and Jermaine. How long do vendors need to maintain their bond after submitting a response to a bid?
So they would have to ensure that it's in effect up to 12 months after the final completion and the what do you call it? Yes, but final completion. So up to 12 months afterwards.
Okay. Thank you.
You're welcome.
And I thought I heard you say that they're able to upload the bonding and insurance information into BPro?
So yes, for the bid bond, they would be required to upload a copy into BPro, right? However, for the performance and payment bond, those have to be submitted directly to the purchasing division.
Okay, thank you. Keeping an eye on the Q&A just in case. I don't want to skip anybody. Okay, I think we're good to move on. Thank you very much, Marlyn and Jermaine. I'd like to now introduce everyone to our next presenter, Gladys Keith, who is the president of FSB Agency, Inc. Gladys, I just want to double check that you have audio before I transition.
Yes, I have it.
Perfect, thank you.
Good morning, everyone. Now, I'm supposed to be talking about bonding, but the previous two presenters basically explained to you why you need bonding for government contracts. What I'm going to do is just basically from my slide explain to you the difference between bonding and insurance. Next slide. I'm not really gonna read it, but it's not, surety bonds are not insurance policies. It's more like banking. And as you can see from reading it, how it's more like banking. Next slide will give you a better understanding. bonding versus insurance. The other gentleman kind of explained that bonding is a three-party instrument where the surety is assuring the project owner the obligee that the contractor principal will perform a contract. Whereas insurance is a two-party agreement where insurance companies will pay the insured directly for losses incurred. The next slide, please. I'm not really going to explain what the bid bond, the performance bond, and payment bond, because they kind of went over all of the stuff I was going to talk about. So next slide. Before I talk about what main underwriting requirements for bonding are, I wanted to, because I'm supposed to stay within the 250 and under range. So when a new company is coming out, they are attempting to get a contract in the government arena, the main thing that I want, or tips that I want to provide, is that they need to make sure that they're incorporated in some kind of format. They can either be a corporation, LLC, or partnership. They must have their own business account, not personal, a business banking account. They must have their taxes current, personal and business. And they should have some sort of in-house accounting system so that if an agent like me calls and say, I need a I need a profit and loss and a balance sheet, that they can generate that type of document when we're dealing in the bonding arena. I also wanted to explain that they should also have a CPA, a banker, a lawyer, and of course, a good insurance agent and a good surety agent. This team they should have in place before they want to step out here and try attempting to get some sort of a bonding line or establish bonding. Now, these requirements are not all, they would not really be requirements starting out for someone who's doing a $200,000 or $250,000 project. This is really requirements for standard bonding. So anybody who wants to get into bonding, and the next presenter is going to talk about bonds over 250, they're going to need these requirements. So make sure you pay attention to what these requirements are and start pulling them together, because you're going to need them when you are growing in your business. Now, as far as the 250 and under, it's actually, there are credit-only programs out here. So if you have good credit, which is considered 650 or higher, there are programs where I can get you started in bonding, and you don't have to have all of this stuff in place, but you have time to start pulling together all of these documents, and you can still get bonding up to 500,000, up to 750,000, and some of the surety companies are even moving it up to 1 million. But when you move up to the 1 million level, you're going to have to start having some of these documents to turn into the surety company. The requirement is, like I said, only credit only. And you need to really monitor your credit and keep it at least 650 or higher to stay in these credit-only programs. There is also, SBA has a quick bond program that you can participate in, which you don't necessarily have to have a 650 credit score, but you should be concentrating on getting that 650 over, because SBA is not, it's a very expensive bonding process, because you're gonna have to pay the surety company as well as paying SBA for the guarantee for the bond. So the bond becomes expensive. So you need to always stay conscious of what your credit is. You can move on to the next slide. Now, these are main obstacles to obtaining a bond. This is going to apply to whether you're doing the 250 and under or 250 and over. You don't need financials for the 250 and under, but you need to be conscious that inadequate financial statements are going to be a hindrance for you. Insufficient working capital. The surety companies need to always feel that you can financially support a project, at least 10% of that project starting out, because when you're in the government arena, not all the time will you get paid every 30 days. Starting out, you may not get that first draw until 60 days, and they want you to be financially strong enough to support that project for the first 60 days. They look at financial statements very, very closely when you start having to submit them, and negative net worth and showing a loss and too much debt are obstacles. Let's just put it that way. The size of the projects that you're trying to achieve. If you don't have experience doing $1 million project, then don't try to go after $1 million project as your first bond. You should stay within what your experience is. If you've done $250,000, $300,000 project, then 1.5 is what they start you out, really. I push my sureties and try to double it, but at least keep it close to twice whatever your largest project. Type of projects. If you are a roofer, then don't request projects for plumbing, or don't go after projects that have nothing to do with what your specialty is. Be conscious that you need to also have labor and equipment in place when you're starting the project. And as I said before, bad credit. The key things that they're looking at when they're looking at your credit is bankruptcies, foreclosures, tax liens, and judgments. Next slide. Now, these are just a few points that they said they want me to do some tips. As I stated before, accounting methods are important. Bid bonds to the surety company is the most important one, because it gives them the opportunity to look at what you are going after and to make sure it's tying to what you say you are qualified to do. That's the main thing they're looking at bid bonds for. And my tip is, don't put up a cashier's check if you don't have bonding in place. I have a lot of headaches with guys doing that, and girls. I've already gone over what your how to start out with the projects and the credit. A lot of my surety companies want you to show at least 100,000 in minimum working capital. What other questions they want me to answer? I think that should cover everything that I have to say about 250 and under bonds.
Thank you very much, Gladys. You touched on some things that I really like, especially when you said that every small business needs a CPA, a banker, a lawyer, and an insurance and surety agent. Sometimes you can't do everything yourself, and you need the experts in those fields to help you. I'm going to double check. I think I see something going on in the Q&A before I go. Okay, it was still the same chain. The RFP came from us and was a TV ad. What I'm gonna suggest, Rinaldi Laporte, my contact information should be, I think, in the chat. If it's not, I'm gonna give you my email and I'm gonna give you my direct line. And I think I'm gonna need a little bit more information in order to help you, but I'm happy to help you. So if you're ready, because I never want you to feel that I'm ignoring your question, thank you, whoever just put it, Jahara, just put my information in the chat. So my email is dnap@broward.org, and you can reach me through our office line, which is 954-357-6400. Give me a call after today's session and let's talk. I'll see if I can get you squared away. There may be an RFP that's out that I'm not aware of, so let's talk about it some more. We can talk about it offline for sure. I didn't see any other questions, so that gives me free reign to ask Gladys one of my own because it got me thinking. So I think I saw on one of your slides, you indicated that it would seem that they would need to be in business for at least 3 years to develop the level of credit worthiness and history in order to be appealing for bonding. What happens if a company is newer, Gladys? Is there any way around that?
Well, that's for the companies that are going after bigger projects over whatever level you had me talk about.
Okay, so
But
under 250 though?
yeah, under 250. Because if they're going through these quick bond programs, they don't need to be in business for 3 years, but they do need to be in business for at least a year. Because the surety wants some type of confidence that they are out there working and there is some experience.
You're on camera.
Hi, Robert. Some experience out there. Okay, so they need to be in business for at least 1 year for the quick bond programs.
Got it. So in
But-
that same vein, to kind of piggyback off of another question that I had asked Marlyn and Jermaine, and correct me if I'm wrong, when companies come together and form a joint ventureship, that joint venture itself wouldn't have past history. Does it have credit worthiness? Like can you give bonding to a joint venture, or would it be given to a member of the joint venture? Or if they're existing long enough, you could? How does that work?
The stronger company is going to be the one carrying the bond basically in that joint venture.
Okay.
The surety, however they approach the surety, It's going to be relying on the financial strength of the stronger of the two in the joint venture.
Got it.
They
So the
will
stronger
have-
qualifies.
Uh-huh.
Okay, that makes sense. And I believe we do have Q&A after Robert, Robert Vetere, who is our next presenter. Mr. Vetere is a surety bond specialist with Seubert, and he will be talking to us about bonding and insurance tips for contracts that are above $250,000. Robert, before I turn my mic off, I just want to confirm you've got audio.
Yes.
Excellent, thank you.
Okay, my name is Robert Vetere. I work with Seubert and Associates. I have been born and raised in Fort Lauderdale, so lived here my whole life. I went to Dillard High School, graduated from Dillard High, and went to Florida International University. I've been in risk management for small and large contractors and businesses for 35 years. So you can go to the next slide. I'm going to try to not be redundant, so we can skip that slide because you guys already went over that. And but I will touch on this. I think just to clear up some confusion, we talked about the different types of bonds. A lot of times I get phone calls and contractors think that you look at a side of a construction truck, it'll say licensed and bonded. Those are licensed bonds. Those are not surety bonds. They are for compliance with state and local licensing laws. So you do need those, but those are not the type of bonds that you need for government projects. That would be a contractor bond. So just wanted to note the difference in those. A lot of people have confusion around that. So next slide, please. Okay, so cost of bonding, that's another area where contractors get a little confused. They see that 5% penalty or 5% bid bond. Sometimes it can be 10% or 20%. The bid bond, most surety companies will not charge you for the bid bond. That 5% represents the penalty. It's basically saying if you bid on a project, a government project, and you are the low bidder, they expect you to do the job for that price. If you say after the bid, oh, gee, I've changed my mind, then there's a bid penalty, which the surety would be paying. And that penalty is 5% or the difference between the next lowest bid, whichever is smaller. So if it was, just for an example, $100,000 contract, you won it and you decided I'm not doing it, the bid penalty that the surety would pay would be 5% or $5,000. But if the next low bid was $101,000, you would just have to pay that $1,000, or the surety would. But they would come back and ask you for those funds later. So the bid bond itself is free. I think I would make a point that what Gladys said is a great tip. Using a cashier's check is great, but if you win the bid, are you able to get the bond? Because if not, you could end up paying that penalty. And so I think that was a really great tip that she gave. Okay, so you can go to the next slide now. Okay, so when a surety company looks at a contractor, they call this the 3 C's of surety bonds. What they're looking for are these factors when they decide whether or not they want to give you that surety credit or that surety bond that you're looking for. First is character. Obviously, history of fulfilling your obligations, paying your bills, your reputation in Westlaw. You don't have a lot of subs or suppliers that are asking you to pay them the money you owe them. And of course, as we've already touched on, your credit score. And I would just really reiterate, if you want to be a contractor and you want to go after bonded projects, your credit's going to be very important. You need to really keep an eye on that, do everything you can to get that number up, not just so that you can be in a fast track program and get credit, but if you need to borrow money from a bank, you're going to need that. So every aspect of the business requires credit. So very important to have good credit going in, and then very important to keep that good credit. And obviously paying your bills and paying suppliers and subs is important for that. The second is capacity. Gladys touched on it, as well as Jermaine and Marlyn. When you are asking for a surety bond, you need to show that you can do that type of job. Generally speaking, if your largest job was 500,000, you could ask for up to $1 million. Sureties usually will go 2 times, but again, that depends on a lot of other factors, but just generally speaking, and also that it's something that you've done before. Sometimes when you're asking for a bond, the surety company may ask for the job cost breakdown. They may want to see exactly what it is that you're doing, what you're spending money on. For example, for an HVAC contract, it may be 75% supplies or materials and very little labor. So all of those things go into whether or not a surety is going to go ahead and issue that bond. And then lastly, capital. Even if you have the experience doing that type of work and you have a great history and a great reputation, if you don't have the cash flow, as Gladys mentioned, to cover that job for a period of time, because your contract may not allow you to get paid every week or every 2 weeks. Sometimes it could be a much longer period of time. So the surety wants to see that you have that money, because when contractors fail, most of the time, it's generally because they run out of money, not because they can't do the job. So the surety wants to see that you've got adequate cash flow to cash flow the job. Also, those terms in the contract, you need to really pay close attention to, because you might not get paid, but you may have to pay the laborers and people that work for you. Okay, so next slide. And go one more. Okay. And this was touched on earlier with Gladys, and I would just like to embellish a little bit. Yes, CPA, banker, lawyer, bond agent, all very important. And I want to talk about the bond agent first, because your bond agent should not just be someone who gets you a bond when you have a project, but more of a consultant, someone that's going to help you get to the next level, where your business wants to go. Most people that start off as contractors are looking to grow their company. They want to get bigger. They might be doing $250,000 to $500,000 bonds today, but if I ask them what they want to be doing 5 or 10 years from now, they may see $10 million bonds. But in order to get to that place, it's very important that you have the right relationships. Obviously, lawyers, bankers, CPAs, to be able to get there. But you need a consultant, which is your bond agent, that's going to help you through that process, that's going to coach you and tell you, this is what you need to do with your CPA and financial statements. Maybe set you up with a banker. I definitely have a lot of bankers locally that I refer contractors to get them lines of credit, things that they need to get to the next level of bonding. So your CPA is important, but it's not just any CPA. Okay, there are CPAs that work specifically with construction projects, with contractors that understand the way bonding works. So one CPA may tell you at the end of the year, hey, take as much money out of the company as you can so you don't have to pay taxes. That is not going to help you with bonding. I just had a contractor do that. We told them, don't take the money out. He did. Then he couldn't get the bond because the surety company doesn't want to see the company depleting its cash every time it gets money. It wants to see you hold the cash. So a CPA that understands the construction business is going to be able to advise you on that. Again, we have several CPAs throughout the state of Florida that focus on construction, that we can refer and obviously give you the ability to have an accountant that understands what you're going to need for bonding. Your banker, obviously construction-friendly banking. I would say Bank of America is probably not where you're going to get your best relationships. Some of the more local banks, regional banks, are much more interested in working with general contractors and helping you in that respect. Lawyers, very important, but even more important when you're bonding, because the contracts are important. A bond basically says that you're going to perform to the letter of the contract. So knowing what's in that contract is important. Different than an unbonded job where you could maybe threaten to walk off. You can't do that when you're bonded because they could file a claim on the bond. So very important that before you enter into these contracts, that you, your lawyers, obviously us as a bonding company, we're going to look at it as well, but make sure that you're signing on to something and you understand every bit of that contract, because it's going to be your responsibility to perform. And that's what the performance bond says, that you'll perform to the contract. So having a bond agent that's going to coach you, refer lawyers, bankers, CPAs, and make sure that you have the right types is going to be very important to the process of growing your company and getting larger and larger bonds as you get larger and larger as a company. Okay, next slide. Okay, and just to try to make a couple of points, I interviewed a few of our larger contractors to ask them, you know, now what's going on in the marketplace, what are the trends? And these are the two things that came up the most. Shrinking suppliers, okay, that there is a trend of suppliers merging. That's what's happening in the supplier market. I'm sure if you're a contractor, you probably have seen this. It decreases the number of suppliers. It reduces the competition. We've seen this in the concrete business, and it a lot of times makes prices higher and makes it a little bit harder to negotiate terms. So very important to try to get good relationships with suppliers, pay your bills on time, and keep on top of those relationships so that when you need something, you can get it. The next major point that I've heard is the labor market. In Florida, there's a lot more work than there are skilled laborers to do it. This will continue to make the cost of labor higher. It's already been doing that for years, and it likely will do that for the foreseeable future. There are trade schools getting new labor out there, but the unaffordability of housing in Florida is another area that's really making it hard for new contractors to find labor. And it appears a hotter topic is to try to make housing more affordable, which is happening now, but it doesn't happen overnight. Okay, you can go to the next slide. Okay, and before I hit on that, Mr. Pinnock had mentioned, very important, he said that more and more projects are requiring bonding, and I think that was a really great point. He also mentioned that you could miss out on the opportunity if you weren't quote unquote bondable. So how to be bondable? Obviously, your surety agent is going to help you with that. There are a lot of different ways to get bonds. We've heard mentioned credit-based programs where they don't look at your financials. They just look at your credit. But once you get above $1 million, they're going to start looking at all of those different financials. And it's important to have a relationship, almost like a marriage, with your surety agent so they could tell you, you need this type of accounting statement if you want to get that type of job, or you need this type of CPA to work with you if you want to start getting into bonding levels at higher and higher levels. So these are all going to be important things. And that's where a surety agent that's a professional and that's willing to roll up his sleeves and just really help your business grow is going to be essential to you getting to the next level. So don't think I'm bondable or I'm not bondable. You can become bondable. Okay. There are things that you can do now. There are avenues that you can go and ways that you can move your business forward. And that's where a great surety agent is going to give you that advice and coach you to get where you want to take your business. Now, on this slide, cash is king. We kind of talked about how leaving money in the business is very important. Where a tax accountant looks at how to pay the least amount in taxes, a CPA that's familiar with construction is not going to tell you how to pay the least in taxes. In fact, maybe just the opposite. You have to show your business has strength and is making money. And unfortunately, when you're making money, you do have to pay taxes. So very important you have the right CPA to help you through that. Secondly, a lot of contractors I talk to want to grow their business. Hey, I'm doing $1 million a year now, but by next year I want to be doing 15 million. That is a big jump. And I can tell you that if it works out for you, that's great, but there are a lot of pitfalls to growing too fast. You have to hire more. If business slows down or you have a turn in the economy, it's hard to go backwards. You need to have methodical, sustainable growth to be a successful business. But hey, maybe you think, hey, I can grow faster than other people and I'll be fine. And maybe that'll work. But I will tell you that in the surety bond area, surety bond companies do not like to see rapid growth. They see it as a big risk. They see it as a potential to cause the business to fail, excuse me. And so if you're trying to get bonds and you start growing too fast, the surety companies are going to push back. They'd like to see slower, methodical growth. I think it's smart for business, but more importantly, it's really smart for bonding. And then lastly, be you. I think, everybody looks at contractors. I know Valerie McNeil will always say, or Ann McNeil, sorry, a niche to get rich. Find the lane that's good for you. Find the lane that you like working in and the things that you do well, and try to be the best you can at that. Don't try to be the next Amazon or some big contractor like Stiles or Whiting Turner. So thanks for having me. I really want to thank the Office of Economic and Small Business Development for having me on. I will take any questions that you have. And certainly if you have any questions, any of the contractors or people out there that are listening, my phone number is on the next slide. My email is there as well. Please feel free to reach out. Don't feel like, hey, unless I'm going to do bonds, I can't call them. Call us up. We'll be happy to answer any questions and help you in any way we can.
Thank you so much, Robert. I am checking my Q&A box. I don't see anything in there. So of course, I've got free reign again, and I've got a couple of questions for you.
Sure.
So I like what you said. Not all CPAs are created equally, and the slow and steady track record goes a long way. I'm curious to know, what happens in an instance where a vendor, and you said it's usually because something happens with being able to finish the work. It's not that they don't know how to do the work. It's just somehow they get derailed. Let me give you a hypothetical. Let's say the owner of a company who's a qualifier passes away and of course defaults on the bond. And let's say the county, again, it's hypothetical, goes after the bond. In a scenario like that, and let's make it more interesting and say it's kind of towards the middle of the project. What happens when they say the surety has to finish the contract? What does that look like from the bonding company's perspective?
Well, that's a really great question, especially in the instance of a contractor passing away, because obviously they didn't do anything wrong, but they still didn't finish the job unless he had an adequate crew. Sometimes the subcontractors will kind of take over. I've seen that happen in situations where the subs will come in and figure out a way to finish the job, especially if they have a good relationship. But the surety, first and foremost, wants to help the contractor that's on the job. So the first thing they're going to look to do is maybe make a loan to the contractor, assuming he didn't pass away. Let's just say they just ran out of money, like you mentioned. The first thing the surety would do is see if they can help the contractor, maybe by giving them a loan. Hey, we'll pay you this money, or we'll give you this money. You'll pay us back later, but it'll allow you to finish the job. In lieu of that, or if that's not an option, the surety has responsibility to either pay an amount, a penal sum, or finish the job. So what that looks like is they have to go out and find another contractor. And most of these sureties companies have contractors that they work with that is willing to finish the job. It's generally more expensive than the original contract. To bring a new contractor in, it ends up causing the contract to be at a higher rate. And then once the surety has finished the job, they're going to go back to the indemnifier or the company that signed up for that bond, and they're going to ask to be made whole. This is, again, as Jermaine and Marlyn pointed out, it's not insurance. So they're not going to just pay the claim and say, hey, aren't you glad you had insurance? They're going to say, hey, you remember when you signed that indemnity agreement? We need our money back now. So that would be pretty much what it looks like. I hope that answered your question.
Definitely. I was always curious. Let me see. I think there's something in my Q&A. The question is more along the lines of insurance, but it says, are insurance companies notified with a notice to owner? I'm not sure any of the presenters thus far.
That
are able
might
to
be
answer that one.
that might be something for Amy. If you're talking about insurance.
Yes, the question was specific to insurance.
Can you repeat it for me? I'm sorry, it's kind of low.
Sure, no problem. Are insurance companies notified with a notice to owner?
I think this kind of falls in line with what we were talking about before. Most of this is manual at this point. So anyone listed on your certificate as additional insured or certificate holder is notified of certain things within the policy, depending on who your policy is with and what the requirements of that company are. But the county is not currently sending out notices for such triggers. Does that make sense?
Understood. I think we've got another one. Can a contractor have more than one bonding company?
Okay, so there's no law that says you cannot have more than one bonding company. However, if a surety is writing bonds for you and they find out that you're now asking another company for bonds, they're going to have a problem because you're taking on risk with other surety companies and maybe adding to your bond line more than what you should. So first of all, the other surety is going to ask you if you have any bonded projects. So it might be hard to do in the first place because the second you go to another surety, they're going to want to know what bonded projects you have. And when you tell them truthfully which bonded projects you have, they're going to say, well, why are you asking us for a bond? Why aren't you asking them? And they're going to get suspicious that maybe your current bonding company is not willing to write that bond. So the best advice I can give you, aside from, getting with a good surety agent, and that surety agent may have multiple. In fact, our company, we have 40 different insurance companies that we work with. So we will find the best fit for you that's going to get you the things that you qualify for and what you need out of those relationships. But surety bonding, you're not just with your agent, but with your surety company, which is the insurance company that's writing the bonds, is a relationship business. Okay. If you have a good standing with a surety, you've worked with them for a while, and you need to, let's say your limit is $2 million bonds, and all of a sudden a project comes along that's 3 million. And you've established a good relationship over the years, you've shown the surety that you finished jobs. We might be able to market that to the surety and tell them why we think you can do this job, even though it's larger than maybe anything you've done in the past. Maybe it's just repetitive. Instead of building a sidewalk that's 100 yards long, you're building one that's 800 yards long. And so I always tell my contractors to come to me and tell me why they think they can do the job. And then I'll try to make the surety understand why they can do the job. But without that relationship, and you just keep switching to the next surety company, when you have a situation arise like that, you're not going to have much sway. So I would say find a bonding company, find a bonding agent that you work well with, and create a relationship and build that relationship. And that's going to be your best track to getting the bonds you need. Having multiple bonding companies is not what sureties want to see.
Thank you. If you'll indulge me, I have another one related to my prior question. So you explained how that works from the perspective of the prime contractor and from the bonding company in the case where the prime defaults and the bonding company needs to step in. In the case where that happens, Or let's say the prime doesn't necessarily default, but there's a subcontractor under the contract that isn't being paid, that has completed their work and needs to be paid. Typically, what's the process for a subcontractor to engage with the bonding company or the surety company in order to say, hey, I need to get paid, either because the owner passed away in my initial example, or to carry it a little further, like you said, what if they couldn't finish the job, ran out of money or whatever, but didn't pay some of the little guys? How do they proceed?
So if there's a bond on the project and if you're a subcontractor, having a bond on a project can be very helpful because you can go and file a claim on the bond. I just had a call yesterday from one of my GCs. He's working on a project that's not bonded and they're not paying him. And he has no bond that he can go after. So what he had to do is put a lien on the property owner to tell the property owner, hey, I've got a lien against this property because these guys need to pay me my money. But in the case of a bonded project, all the subcontractor would do is write a letter both to the prime GC that he's not getting paid by, and obviously add in the insurance company and the surety agent and basically explain that I'm not getting paid and why. If the prime GC has no reason for not paying you, you're gonna be fine. But generally in these situations, there's a reason the prime isn't paying the sub, and generally it's because they feel like either their workmanship is defective or things of that nature. But if there is no problem with the work you did and you're just not getting paid, you can file a claim against the bond and hopefully you'll get paid as long as your claim is valid.
Thank you. Another question popped up in the Q&A box. It says, if you're adding a construction leg to an existing consulting company, can the integrity and income of the company be used for bonding and insurance?
I would say yes, but that doesn't just mean they're just going to write you any bonds you want, especially if the other company wasn't in the construction business. They could be very successful in the internet business, and then they decide to start a construction leg. The surety, and I haven't come across that situation often. Usually it's contractors that are merging together or getting bigger, but this is going to go back to your capacity, your ability to do jobs. How can you show the surety that, hey, we're great at construction. We've never done it before, but hey, we're starting this construction leg. So yeah, that would be what I would say about that.
Thank you. And is there a typical time frame in terms of the documentation submitted to the point where you become bonded and insured? Like, is there an approximation of the time frame?
I mean, if you're talking about a credit-based program, it can be very quick as almost instantaneous. You can fill out a contractor's questionnaire with us. We can go into the fast track system, put in your information, and if your credit is above that threshold of 650, and every company is a little different. Some have higher thresholds than that, but as long as your credit's good, I've had turnarounds within a half hour to 45 minutes where I was able to say, okay, we can do that bond, but that's up to $1 million. When you start to go over that $1 million threshold, providing the financial statements, I would say as long as there are no questions, your financials look good, maybe 24 to 48 hours to get bondable. But if there are, hey, you didn't give us a proper work in process schedule, or one thing that wasn't mentioned before about CPA statements, the sureties want them in accrual basis, and a lot of smaller contractors, they have those statements in a cash basis. I just had a situation come along where the contractor was qualified. He does big jobs. He has all the capacity and character you could ever want, but he's never needed a bond before. So his CPA statements were all on a cash basis. We were able to get him a one-time exception, but the next time he needs a bond, he's going to have his statements in accrual basis. So that was a little more than what you asked, but.
No, but it's good information. Thank you. All right. With that, thank you, Robert. We're going to switch gears a little bit. Our next presenter is Anna Castellanos. She's a small group regional sales manager with Florida Blue. She's going to give us some tips and resources as well as information on insurance for small businesses. Anna, before I switch over and turn my mic off, do you want to say hi just so I can confirm you've got audio?
Good morning.
Good morning. Thank you.
Thank you. And I just want to say, first of all, Gladys, Robert, and you, Donna, make a really good point as to what your necessary contacts are if you're a small business. I do want to add and allude to the insurance side of things, where you should also have the appropriate medical benefits insurance broker. So I just wanted to point that out, but thank you for having us today. Our presentation is going to primarily focus on you as a small business owner and how you can well invest in your employees' well-being. So we know that insurance is here for a rainy day, but medical insurance out of all is one of the most key benefits, important benefits for you to offer to your employees. So if we go to the next slide, I'm pretty sure you guys are all familiar with the word inflation. And as health insurance costs rise, small businesses often find ways to find quality coverage that's affordable, not just you as a business owner, but also for your employees. So we're here, Florida Blue's here to help you find solutions that fit your business needs, also that are flexible and can provide you with the level of coverage that you need, and it can be an asset to your business success. So we're going to discuss a couple of things. Obviously, our objective for you today on this part of the presentation is for you to have a solid understanding of the benefits that are offered by providing health insurance to your employees and all of the various options available by doing so. We're also going to discuss a little bit about the tools and resources available to help support your communication efforts and the value of these benefits to your employees, so that you can make well-informed decisions about providing health insurance and your healthcare needs. So if we go to the next slide, we're going to talk a little bit about Florida Blue, and you may have heard us or about us in the past. We are a leading insurance carrier in the state of Florida, only in the state of Florida, for a little bit over 80 years. And we serve about maybe 6 million members across the state of Florida, which makes us the leading force in the health insurance industry. We are headquartered in Florida. We have more than 9,000 employees in our company, and we're available in all 67 counties in Florida. So our organization is really more than your local insurance company. We have a local presence team, and actually we have Cindy Mason, which is our local market leader, with us today as well, that represents Broward County. So we're always working to help focus on improving the health of families, of businesses around town, and partner closely with community organizations, and also invest in our community by being there through our Florida Blue Foundation, where we help our nonprofit organization and small businesses with grants. So obviously, small businesses in Florida are key for us, and we're an invested community member. Our approach to healthcare is really centered around improving healthcare affordability and access to quality care when you need it. On the next slide, we're going to talk a little bit about why is it important for you to offer the medical benefits field in your company. So if you're a business decision maker, and by the way, if you're a business owner, congratulations. Let's go back to that word inflation. Right now, with this everlasting change of our state and all the things that are coming forth, I understand it is crucial to make sure that your expenditures and what you are basically offering to your employees are affordable. So we keep that at top of mind. It's important for you to understand the benefits of offering health insurance to your employees and all of the options available in doing so. That's why today's conversation is really focused on unpacking this topic, basically just to empower you and make informed decisions about providing a health insurance. We want to help you understand how health insurance can work for your business. It can drive productivity and share, how to identify what your options are when it comes to a health solution that covers you and your family. So if you can see on the left-hand side, these are just a few brief bullet points as to what are the attributes of offering medical coverage? So we've done various studies. Once you offer medical benefits, you're attracting and retaining talent. So not a lot of businesses out there are focusing on making sure that their employees are healthy. I always say a healthy workforce is a working workforce. So that's to keep top of mind. Enhancing employee morale and engagement. When you offer medical benefits, you're basically telling your employees that you care about their well-being. You want to make sure that they're healthy, that they're active, they're engaged, they're going to the doctor, and that they have coverage in order to do so. We also are focusing on improving employee health and productivity and offering flexible plan options that optimize your business. And for you as an employee of a business, we offer you high quality and affordable plan options, and it's definitely going to improve your quality of life. If you do all of your preventative care, if you go to your doctor, you keep up with your health, that's basically a given in that point. We also have reliable resources, which we're going to go over in a minute, and we also protect your family as well. So on the next slide, this is going to talk a little bit about attracting and retaining talent. I think a lot of businesses out there ask, and this question gets asked a lot, is why are we going to offer benefits when maybe an employee can get insurance through the marketplace, which is the Affordable Care Act, or should I offer insurance through my business? So we're going to talk a little bit about the benefits of doing it through your business and also doing it through the Affordable Care Act. So as you know, we are the leading force in individual health insurance as well, in addition to small group insurance. So 60% of the job seekers report that benefits and perks is actually among the top considerations before even accepting a job. So when you're looking for talent and you're hiring, one of the main questions that everybody has in their head is, what kind of benefits am I going to get as a result of working with you? So that's number one. Second point is 60% of the insurance employees feel benefits were a key reason for staying with their current employees. So now you have a workforce that is well informed with their medical decisions and their needs. So you are always going to have employees that are going to think, am I having the right coverage if I work with this company? Are they treating me well? Are they paying me well? And what am I getting as a result of that if they were to move to another opportunity? In addition to that, employees with good health benefits are 38% more engaged and productive at work. So these are all studies that we've done just to justify the reasons why medical benefits are key to your business. On the next slide, we're going to talk a little bit about the impacts of health benefits for your business and employees. So where do you begin? There's so many critical elements that contribute to selecting a health insurance plan that works. So starting with an agent is key, and that's my team. We have about 2,900 agency partners in South Florida alone that are able to manage and maneuver your different options. So a local agent is always going to help you personalize health solutions for you and your business. And our agents are always going to help you choose which funding arrangement and flexible health plans options are best. So we definitely have a variety of options, and it can get quite complicated on the back end trying to decide what to do and how to do it. So always having an agent on that list of important contacts, your health insurance agent should be one of those to help guide you. The agent is going to help you discover inside scoops on savings. So like taking advantage of the qualified tax incentives and credits, because there are definitely some incentives out there for you to be able to offer insurance through your company, or even capitalize on member rewards and wellness programs that help you manage healthcare costs and optimize your needs. On the next slide, we're going to talk a little bit about tax incentives. Now, we always refer for you to work with your CPA to get the exact numbers. But what I can tell you is no matter what your business budget is, every organization loves to save money. I know we all do. So as a small business, there are a variety of tools and resources available to maximize savings. Number one, there are tax deductions. So when you pay your premium each month, right now at the moment, you are more than likely paying a monthly premium for your medical insurance. If you offer that through your small business, 50% of what you pay on a monthly basis is tax deductible. So when you file your taxes the following year, that money will be returned. So more information through your CPA on that. Additionally, there are tax credits and incentives for small business consumers that you may qualify for. So within the state of Florida, there are ways that you can, as an incentive, offer medical insurance and get an additional tax credit as a result of just offering insurance. We also have accounts like health savings accounts and flexible spending accounts. These accounts really allow employees and yourself as a decision maker to set aside pre-tax dollars for qualified medical expenses. Employers who contribute to these accounts can also deduct these contributions as a business expense. So these accounts are obviously very important when it comes to saving money as well. In the next slide, we're going to talk a little bit about preventative care. So when choosing a plan, uncovering what is value-added offering is beneficial to you. So we have, and we focus as a business on preventative care, chronic care, mental health, and also health plans that manage risk. So if you do have a sickly employee, or you are have a chronic condition, or you're taking a specific medication, we will not deny you. We cannot deny you due to the Affordable Care Act guidelines. You will obtain coverage. We just have to work with you to make sure that you choose the plan that has the best coverage for your needs. So as Florida Blue, we offer health and wellness services. So we do have retail centers, which are now called the Florida Blue Centers. You can walk in whether you're a member or not. We have one in Broward County by the Sawgrass Mills Mall. I encourage you guys to visit just so that you can experience what we do aside from just offering medical insurance. We have nurses on site, nurse practitioners. We offer free classes, all kinds of classes. If you're a business owner, we do introductory business owner classes. We do technology classes. We do fitness classes. All of it is at no cost. And in addition to that, if you need a counselor or if you need a social worker, we have those on site as well in those centers. As you can see, when committed to these solutions, we're here to provide all of that for you, whether it's in a center or through one of our agents. So on the next slide. So now we already talked a little bit about the impacts of health benefits for your business and employees. Really, this is an example of one of our companies in South Florida, where in a case study, we found that by working with this company that is a local company, they successfully leveraged their health insurance to improve employee retention and promote a healthy living. This was actually a small group electrical contracting firm. This is just tying it all in together for you so you can see an example. So this small electrical company was based around 25 employees, and they specialized in residential and commercial electrical services. So like these small businesses, they definitely face challenges in attracting and retaining skilled workers in a competitive labor market like the one today. So basically the challenge was the company had experienced a high turnover, which basically disrupted their operations and increased their recruitment strategies and training costs. So management, they identified that they lacked the comprehensive benefits, particularly health insurance, as a significant factor contributing to the employee dissatisfaction and turnover. Basically, what the company decided to do is they decided to offer health insurance plans to their employees. And the plan actually that they chose covered a significant portion of their premiums. So basically the company, instead of paying that minimum 50%, they decided to pay 80 to 100% of that premium, which by the way is tax deductible. So at the end of it, the employees felt like they were covered and cared for. So it improved employee retention. So that introduction of those health insurance benefits and wellness programs led to a notable decrease in their turnover numbers. And the employees really felt more secure knowing that they had access to healthcare, which fostered that great sense of loyalty to the company. The reduction in turnover also resulted in a lower recruitment and training cost for the company. They obviously had enhanced employee satisfaction. So employees felt like they were covered and they were happy going into work, making sure that they had those benefits. And obviously they're promoting healthy living as a result of offering these benefits. So not only do we offer a comprehensive plan, but we offer a health wellness program where you can get dollars just for doing healthy activities. So if you go in online, once you're a member, and you complete these preventative activities, we actually will reward you with dollars and a Visa card where you could use that for health-related expenses. So just getting to know your plan and getting to know your insurance company is part of the process. But I do want to leave you with that. And if you have any questions for me, I left my name and email address. We can set up a call and we can always discuss further. But thank you to the Office of Business and Economic Development for having us.
Thank you so much, Anna. We appreciate it. I saw there was a question in the Q&A. I wanted to let whoever had asked before, I saw you withdrew your question. We're going to ask Anna some questions if you have any specific to her presentation, but we'll also take a few minutes where if there's something you thought of for any of the other presenters that you heard from today, you can still put them in the Q&A and we'll address them.
And by the way,
Yes.
there was a question in there. It was regarding bonding, and so I just typed an answer in there.
Oh, thank you. I knew I saw one and then it disappeared.
Yeah, they were just asking what the most important thing on the work in process was, and yeah, I typed it in. So
do you mind saying it out loud, Robert, so the rest of the audience could benefit from your wisdom?
Of course, yeah. So the most important thing that the surety is looking for in your work in process is basically where you are on your current jobs. They want to see where you are. Are you 25% complete? Are you 50% complete? Because that speaks to your available bond line. If you say you have $1 million bond line and you have $1 million job, but you're halfway through with it and you've been paid 50%, the surety may consider that you still have about $500,000 of bond credit. So that's why the work in process is so important, because it shows your percentage of completion on current jobs and gives the surety an idea of exactly where you are and how much more they want to extend or give you in credit if you're looking to bid other projects. Because you don't win every bid that you get or that you bid on. So you want to be able to bid on projects even while you're working on current projects. And so that's where the work in progress report or work in process becomes very important. The percentage of completion part and what you've been paid up to date.
Thank you.
You're
There
welcome.
is a new question in the Q&A. Mernette, you and I had the same question for Anna. She asked, what number of employees do you need to have in order to consider health insurance?
That's such a great question. And we're actually one of the few carriers where we offer coverage just for one employee or more, as long as that one employee is on a W-2. That is our only requirement, and that the business is located and headquartered in the state of Florida. So technically 2 requirements. Hopefully that helps answer.
So that's one employee plus the owner, or does the owner count?
The owner does count as well.
Okay, thank you.
You're welcome.
I'll give it a second, see if there are any other questions popping in the chat, as well as in the Q&A. I saw something in the chat. Ah, that was Jahara, a member of our team. There is a question that I had, and I think, well, Robert or Gladys could answer. I thought in your presentation, Gladys, you mentioned, or no, it was Jermaine. The question was, how long after do you have to maintain your bond? And I think the answer was 12 months. Are there any tips or best practices for a small business that wants to go after a new job that may have 1 or 2 bonding limits tied up with projects they've already completed? Like, what's the best way to transition away from that to free up your credit so that you qualify for a new one, or are you just stuck?
The best way to increase your bondability is working capital, because that's what the surety is looking at, your ability to cover all of the different projects out there. So if 3 jobs and say his bondability is 1.5 million and he's got 3 jobs going and he's still working on those 3 jobs and he sees something else that he wants, well, the surety is gonna wanna look at his work in progress to see what the status is of those jobs. How much has he done on them? Are they going down? And if they are still above, I'm gonna say 50, 60%, he's still got that much to go. They're gonna look at his working capital, available working capital. Do you have enough working capital to add another job within your 1.5 million bondability, whatever you've been set up with the surety company? So in order for us as agents to get them increased bondability, we have to show increased working capital.
Got it. Thank you. There's still time to ask any more questions. Let me see. I don't have any new ones, so I'll give it a few seconds. Maybe all your questions have been answered, at which point we're going to transition. All right. Well, in that case, I think it's survey time. I believe our CRO team has launched a very brief survey, which should be visible to you momentarily. Team, tell me if I'm wrong. There's always a survey with these guys, so I'm just assuming there's a survey. We like to know how we're doing, and it helps with the programming for future events. So if it doesn't pop up, then I'm gonna, okay, there it is. I think it's visible now. If you just take a minute to complete it, I'd appreciate it. It's very brief. And tell us how we're doing. And you can always minimize it and complete it while I go through. So I'm going to minimize mine. I'm going to give the highest score possible. So how do you stay in touch with us? How do you stay engaged? If you want to hear about other events similar to this one that we put on, or even those of our community partners, I encourage you to sign up for our e-weekly newsletter. It's called the Business Assistance Weekly, or the BA, and we post a new edition every Wednesday evening. I think it's around 6 p.m. You can scan the QR code on your screen. No charge, folks, and it's chock full of really useful information. It ranges from success stories and highlights to upcoming opportunities, maybe changes in the current small business regulations, both federal and local. Really good information, tips. I think there's also a section you can see on the screen from our director, Sandy Michael McDonald. He has a feature in there every week, but it's very helpful information and it's recurring. Next slide, please. Coming up is one of our office's annual signature events. We have 2 a year, and it is called FITSE. It's the Florida International Trade and Cultural Expo. It is going to be held at the Broward Convention Center. It's going to be October 23rd through the 24th. Like all of our programming, it is free of charge. We've been doing it for several years now. Delegations from all over the world come. I think we've had the largest delegations from Africa and Europe, specifically Italy, for our past events. It's a really good trade expo. So if you're interested in doing business with other countries, selling your goods or buying theirs, it's a really good networking event. You can also inquire about having a booth there as a vendor. So the information's on the screen. You can use your camera for the QR code. You do have to register. So that should take you there. Next slide, please. Okay, I think that's it. Thank you. A very big thank you on behalf of OESBD and especially our director, Sandy Michael McDonald. That's his contact information on the screen. He does have an open door policy. So if there's some need that you have, you can always reach out to us or to him. I'd like to also say a great big thank you to all of our speakers, Amy Lanham, Marlyn Mahabeer, Jermaine Pinnock, Gladys Keith, Robert Vetere, Anna Castellanos. Thank you so much. The information you shared was invaluable, and I'm hoping our audience got as much out of it as we did. We're going to be posting the recording, as I said before, on our YouTube site. Give us a few days to finalize the editing and to upload it, but definitely check out our YouTube channel as well. We've got a lot of information there. Thank you for joining us. We'll see you next time. Have a great weekend, everyone.
Thank you. Have a great weekend.
Thank you.